Welcome back to BD Daily Finance News Podcast, your daily briefing on finance and investing. It's 2026, February 19th, and today's theme is The Data Says Steady. The headlines say, Buckle Up.
I love when the economy talks like a calm yoga instructor, but markets react like a cat that heard a cucumber hit the floor.
3 stories. First, U.S. jobless claims drop to 206,000 and the trade deficit widens. Second, Walmart posts strong holiday growth, but guidance disappoints. Third, oil extends its biggest jump since October on U.S.-Iran conflict concerns.
So we've got jobs, shopping, and oil. Basically, your paycheck, your cart, and the thing that makes your commute feel like a subscription you forgot to cancel.
Applications for U.S. unemployment benefits fell by the most since November. Initial claims dropped by 23,000 to 206,000 in the week ended Feb 14th.
206,000 sounds like a lot of people, but in economy numbers, is that good, bad, or your uncle just posted a Facebook chart?
In context, it's a sign of stabilization. Jobless claims are a weekly pulse check. Lower claims generally mean fewer layoffs, which supports consumer spending and reduces recession risk, at least in the near term.
So it's basically like checking your phone battery. If it's not dropping fast, you're not panicking yet, but you still might be in low power mode emotionally.
Exactly. Now the other half of this headline, the U.S. trade deficit unexpectedly widened in December to $70.3 billion, and the full-year deficit totaled $901.5 billion.
Trade deficit is the phrase that makes people argue at dinner. Is it we're losing, or is it we're buying stuff because we can?
Think of it like your household. If you buy more from outside than you sell, you run a deficit. It's not automatically bad, especially if consumers and businesses are strong, but it can subtract from GDP in the accounting sense, and can be politically sensitive.
So the economy is like, I'm employed, but also I ordered everything online at 2 a.m.
Why it matters for normal people: steady jobs support wages and confidence. But a wider deficit can feed narratives about manufacturing and supply chains, and it can influence policy, tariffs, industrial subsidies, which then show up in prices.
Your job might feel safer, but your stuff might get pricier if policy people start playing Who Moved My Imports?
Story 2. Walmart reported strong holiday growth, but its earnings outlook fell short of estimates. This is the classic great past, cautious future earnings combo.
Walmart is like America's receipt. If Walmart's nervous, I'm nervous. If Walmart's confident, I still check my bank app, but with hope.
Here's the simple finance behind it. Markets don't just price what happened, they price what management thinks will happen. Guidance is basically the company saying, here's what we can realistically deliver, and investors compare that to expectations.
So earnings are your report card, and guidance is your teacher writing, shows potential but talks too much in class.
Exactly. And for everyday people, Walmart's commentary can hint at consumer stress, trading down, buying more essentials, pulling back on discretionary items. It also signals how sticky inflation feels at the checkout line.
People are still shopping, but they're shopping like they're being watched by their future self.
Actionable angle. If a value retailer is strong but cautious, it can mean consumers are resilient, yet price-sensitive. For investors, that often favors companies with pricing power and efficient supply chains. And it's a reminder to stress test your budget for higher essentials.
Stress test your budget. Like, if eggs do a backflip again, do I still have a retirement plan, or do I just have vibes?
Oil extended its biggest daily gain since October on concerns that the U.S. and Iran are inching closer to a fresh conflict. Markets are pricing in supply risk and disruption premiums.
Ah, yes, the conflict premium, the invisible fee on everything, like resort fees, but for the global economy.
Simple version, oil is a globally traded commodity. If traders think supply could be disrupted, shipping routes, production, sanctions, prices can jump before anything physically changes. It's anticipation moving faster than reality.
So oil is basically the group chat. One person types, "We need to talk," and everyone spirals before the meeting even happens.
Why it matters.
Higher oil can feed into gasoline, shipping costs, and eventually consumer prices. That can complicate the inflation outlook. And if inflation looks sticky, central banks stay cautious, which can pressure stocks and bonds.
So if oil pops, it's not just my road trip costs more. It's my groceries are now sponsored by geopolitics.
Quick recap. Jobless claims at 206,000 suggests labor is holding up. The trade deficit widening reminds us growth math and policy risk can diverge from how people feel day to day. Walmart, strong quarter, cautious outlook. Resilient but price-sensitive consumers. Oil, geopolitical risk can reignite inflation concerns fast.
Today's vibe is stable with a side of spicy, like a plain bagel that somehow costs more because oil did a cartwheel.
Practical checklist for listeners. 1. If you're job hunting, this is a reminder to watch weekly claims trends, not one print. 2. Review your household essentials budget. Energy and food are the usual shock absorbers. 3. For investors, know your exposure to energy-sensitive sectors and inflation-sensitive assets.
And if your portfolio strategy is just yelling diversify into the void, today is your sign to actually look at your statements. The void is not a fiduciary.
If this helped, subscribe and leave a review. It tells the algorithm we're not just two people arguing about receipts and oil barrels. And comment your take. Are you more worried about inflation re-accelerating from energy or growth cooling from consumer caution?
Also, if Walmart can be cautious after a strong holiday season, you can be cautious after a strong week of meal prep. Stay humble, stay solvent.
That's it for 2026, February 19th. This was BD Daily Finance News Podcast, your daily briefing on finance and investing. See you tomorrow.